Hello, this is Patrick White from AA Commodities and Investments with your Tuesday, August 20th market recap video. As you can see here, we had a close lower here in the corn market. We were down about 5 3/4 in December corn at 368 3/4. Soybeans were up about 1 3/4 cents at 868 1/4, and December Chicago wheat was down 6 cents at 466 1/2. I'm going to go ahead and get it started off with a disclaimer here. Just remember that everything I say in this video is just my opinion. There's no direct trade recommendations, anything like that. If you'd like to read the full disclaimer, please pause the video now. All right, so as you can see here, we had a mostly lower day across the board here. We started out higher on the overnight from the crop ratings. We had corn crop ratings down 1%, down to 56%, good to excellent there. Soybean crop ratings, they were down to 53%, good to excellent, and they were also down 1%. So we had a gap open on the overnight on soybeans. We were up as much as 3.5 cents here on corn. With that being said, we really didn't hold in there. Really, I think it's just because, the overnight rains, we had some pretty good solid rains here across Iowa and across Illinois. As you can see here on this radar, if it'll come up here, we had a pretty good system that went across Iowa and through Illinois here today. So there's a lot of just the drier areas. Basically, this eastern half of Iowa and the northern third of Illinois was dry. When you look at the 6 to 10 day outlook, we're heading out for cooler temps and wetter conditions here in the 6 to 10 day and the 8 to 14 days. You can see here. Just a lot of it's the western corn belt, but looks like there's going to be some more moisture come in here as far as later on between now and the beginning of September. So something to keep an eye on there. The markets certainly don't like that information. They've been selling off ever since then, and also we had some negative news on the ethanol side of things today as well. So going in to look at D's corn here, we try to trade as much as 3.5 cents higher on the overnight. Like I said, we found resistance right around like the 380, 381 level. It sold off. They tried to hold that 370 level in there, but we had some news that POET is considering idling one of its plants out in Indiana indefinitely and cutting production at about half of its plants. Basically, they pinned the reason on the EPA, approving the 31 small refinery exemption waivers, and that's just it's not good for ethanol demand, and really it just comes as kind of a shock, out of the the Republican administration there. And out of the Trump administration, and a lot of people didn't really think that this would happen underneath this president, but it has. So we've got the 31 small refinery waivers, and it is impacting the ethanol markets. So with that, we had corn trading lower. We broke the 370 level on that news, so now this puts the 363 3/4 contract low in the December corn chart, puts that into play. I would imagine there's a lot of eyes on this contract low level, and there should be some buyers in there. A near-term target that I've been talking about here for a while has been the 392 3/4 gap level. That would fill the gap level. If we get past that, I would expect $4. That would be a pretty good size psychological level as well. So I think if you want to be long here at the 363 3/4 contract low, or maybe a little lower than that, you could look for a recovery up and fill that gap at some point here. We should get a relief rally. So on soybeans here so far, really just a two-sided trading day. They try to come in about 7 cents higher here. They gapped up on the overnight. If you look at like an intraday chart, which I'll pull up here, this is a 30-minute chart. We had a nice gap up there at 7 o'clock there after the crop condition ratings came in 1% lower. Trade was looking for 1% higher. But as you can see here, right at 8:30, we sold off. We ended up filling that gap in. We're doing a good job of holding like the 865 level. I think that there's going to be good support between there in the low 860s. If we break that, we're probably headed down to 845. So with that being said, we couldn't really get anywhere on soybeans. Really didn't, we only closed up 1 3/4 cents. Really didn't move a whole lot. Just caught between the higher meal market and the much lower soybean oil market here today. So December wheat broke the key 470 resistance level there that I was talking about here yesterday. Pretty solid selling here, right along with the corn market, just right out of the gate here today. We broke out that 470 low level. If you look at that, ended up taking out that low there that we made on the 13th of August, and ended up testing back near the 470 level towards the close here. So really not a good sign for the wheat market. I'm thinking we're probably going to get another extended slide down here, down to the 460 and possibly like 453, 455 level. So definitely finding more sellers as we get lower in the wheat market. On cattle here, we had our first positive day in 8 days. Ended up testing above the $100 level and closing right there. We were up $1.77 at $100 even to close out October live cattle today. I guess we just got this range between 98 and 101 in here. Nice little $3 range. If we can break above there, I would expect us to go up to this 103.50 level that matches these lows here from late in May and into June. Excuse me. So if we can break above there at 101, I expect us to go up to 103.50. What you don't want to see if you're long is a close below 98, and that would suggest a close or a further run down to 96. And the final chart here that I'm going to talk about today, well, besides cotton, is the October hog chart. We broke out lower, had a limit lower close day on Friday, and got down and tested this $62 to $61.50 level. The traders have rejected that here thus far. We got back above $64.50, so I'm expecting this to continue its range here. I guess, the $68.70 level has been good topside resistance, and traders have been unable to find new sellers, when they close lower here at 62. So I would look for this basically 62 to 68.70 to be your new range. And the trade is just kind of confused here. They don't know what side to take it, because they don't have an answer on whether or not China and their increased exports from other countries is going to increase the U.S.'s exports of pork. So kind of a wait and see there. And I think that, we definitely need more information to break us out of this range. It does kind of look like we have found some good support here down at 61.50, 62, yet we lack a story to really get these get traders excited. I would think if we were able to get a close above this $68.70 mark, you would think that we would be able to trade back to 64.5 or 74.5 to 75. So, and last chart we're going to talk about here is the cotton market. Cotton has failed at the $68 or $60 mark here to start the week. We did end up getting a close above it just fractionally on Friday, but we've lost that here to start the week. Really not a whole lot of action there, as just the forecast and stuff for the Texas Panhandle have come in wetter, and they got wetter between Monday and Tuesday today. So not a whole lot of a threatening forecast right now for Texas, although it has been dry and they have missed a lot of rain. It looks like the forecasts are keeping traders tempered for now. So that's about all I got here, guys. If you want to give me a call anytime here, 712-262-7606. Thanks.